How do we evaluate potential borrowers? Well, I have three words for it: collateral, collateral, collateral. Of course, it is somewhat more complicated than that, but suffice it to say that understanding collateral that is being borrowed against is one of the most important aspects of how a loan is going to be repaid. At Stabilis, we use a 4-factor model. Using a model allows us to objectively look at different transaction opportunities and not miss anything. Among the factors that is critical to our analysis is the size of a metropolitan statistical area, or MSA. For example, an asset in New York or Los Angeles will have much more liquidity than an asset in a small Midwestern state, and even less liquidity in a small Midwestern city like Terre Haute, Indiana. Once we get through the MSA, we look at more granular level data within an MSA at the census tract level. This is information that we get from the Census Bureau. We have a proprietary model that evaluates it, and this information is more granular than even zip codes. Understanding this provides us an ability to determine the cash flow and the liquidity options on a particular note and how it may get repaid. Occupancy and capex are the next levels of analysis. High occupancy and low amount of capex needed on a project in a smaller MSA may allow us to make a loan, because it mitigates the size issue. Whereas we will take some leasing risk and some moderate amount of capex risk in a larger MSA with leasing momentum. In all cases, we need to be highly comfortable that there is sufficient cash flow to satisfy our loan repayment. We overlay this analysis from our 4-factor model with a macro view. For example, industrial assets right now have tailwinds. This was true pre-COVID and has only improved since COVID because there's a high degree of utilization and strong demand for industrial assets. Last but not the least, we are senior secured and in a first lien position. That allows us to have a margin of safety against the loan, which in the first instance has gone through our pretty rigorous process of deal selection. Applying all these factors allows us to get a buffer against any impairment in the asset, and following this above process with discipline gives us the ability that we have and the comfort that we have evaluated a potential borrower properly and results in a quality loan.